Healthcare during retirement is one of those things that we all know we should plan for, but it can feel a little bit overwhelming. But what if I told you that just by understanding one key number, you could reduce your future medical bills, grow your savings at 4% per year, and even get some tax benefits? That's the basic healthcare sum, also known as the BHS. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. In this video, we are diving into the basic healthcare sum, what it is, how it works, how it's calculated, and how it fits into your overall financial planning. Let's get to it. Okay, first of all, what is the basic healthcare sum? Let me start with the big picture. Think of your MediSave account as your personal healthcare wallet. It's managed by CPF and it's used to pay for medical expenses like hospital stays, outpatient treatments, and premiums for MediShield Life and CareShield Life. Now, the basic healthcare sum is the maximum amount you can have in your MediSave account. Once your balance reaches this amount, CPF stops allocating more funds into your MediSave. Instead, your contributions start flowing into other CPF accounts like your special account or your retirement account, where they continue to grow for your retirement. It's basically CPF's way of saying, you've saved enough for basic healthcare, let's build the rest of your retirement nest egg. So, how much is enough? If you are turning 65 years old in 2025, your BHS is currently 75.5k. And once you reach 65, that number becomes fixed for your life. Even if the BHS increases later on, your cap stays the same. So to give you some context, those who turned 65 in 2024 had a BHS of 71.5k, in 2023 it was 68k, and in 2022 it was 66k. So if you're not yet 65 years old, your BHS will likely be higher when your turn comes, because CPF adjusts the amount every year to keep up with inflation and rising medical costs. But how does CPF decide what the BHS should be? Okay, it's not a random amount. CPF studies how much seniors in Singapore typically spend on healthcare using MediSave from age 65 onwards. That includes the hospital bills, the long-term care and outpatient treatments, and even insurance premiums. They use that data to estimate what someone will need for basic healthcare coverage in retirement. To keep up with cost increases, the BHS is adjusted annually, and based on some calculations that we did, historically the rate increases range from 3.8% to 5% per year, with the average being about 4.6%. This ensures that your MediSave savings are relevant and sufficient no matter when you retire. Okay, let's now talk about why reaching the BHS is actually a great thing. First, it means that you are well prepared for medical expenses. You can use MediSave to pay for healthcare costs without needing to dip into cash. Second, your MediSave account earns 4% interest per year, guaranteed. That's a solid return, especially compared to regular bank savings account. Third, if you voluntarily top up your MediSave to reach the BHS faster, you could enjoy tax relief, which lowers your taxable income. And lastly, once your MediSave is full, CPF automatically redirects your excess contributions to your special account or your retirement account. That way, your CPF continues working hard for you, growing your retirement savings without any extra effort. So, reaching the BHS isn't the end of a journey, it's more of a milestone that helps you optimize your CPF even more. Now, let's say you're someone who already hit the BHS. What happens to your future MediSave contributions? CPF has a built-in system for this. If you are under 55 and haven't hit your FRS or your full retirement sum yet, the extra goes into your special account. I've covered more about the CPF retirement sums in another video, so be sure to check it out. I'll link it in the description down below. But if your special account is already full, then it will flow into your CPF ordinary account. Once you're 55 and above, you've met your full retirement sum or the basic retirement sum with a property pledge, the excess from MediSave goes into your ordinary account as well. So even after reaching the BHS, your savings are still being used efficiently to grow your retirement fund first, while the remainder can be used towards stuff like your housing. Make sure to watch our video on the CPF ordinary account to learn more about it. Link in the description below. Okay, what if you don't hit the BHS? No worries, if you haven't hit the BHS, CPF will continue allocating your mandatory contributions into your MediSave account until you do. But if you're nearing retirement and still far from the cap, you might want to consider voluntary top-ups. This helps you build up your MediSave faster, giving you that 4% interest, and if you're eligible, you'll enjoy tax savings along the way. Just keep in mind that once you top up into your MediSave account, the money is locked in for healthcare use only. So make sure you don't need the cash for something else in the short term. Still, for many people, reaching the BHS gives you a lot more peace of mind about future medical expenses. And that's it. That's the basic healthcare sum explained simply. It's not just another CPF acronym, it's a key part of making sure you're financially prepared for your healthcare during your retirement. Understanding your BHS helps you plan smarter, use your CPF more efficiently, and take care of your health and finances in the long run. If you're still unsure how the BHS fits into your overall retirement plan, we've partnered with unbiased and licensed financial advisors who've helped thousands of Singaporeans better manage their CPF, whether it's from their MediSave to retirement planning and even more. You can speak to one of them for free using the link in the description below. No pressure at all, just honest, personalized advice. Also, let me know down in the comments below what part of CPF still confuses you the most. I'd love to cover it in a future video. And if this video helped you out, give it a like and share it with someone who's planning for retirement. And make sure to hit that subscribe button for more financial tips. Thanks for watching. I'll see you in the next video.